This video is supported by Huvepharma. Huvepharma is a fast-growing pharmaceutical company with a focus on developing, manufacturing and marketing animal health products that boost the performance of our customers' businesses globally. We are one of the top 10 animal health companies in the world, and our aim is to reach and improve the health and performance of every food-producing animal via our unique portfolio of products. Our strengths lie in our fermentation and technical expertise used in our state-of-the-art manufacturing sites. With a total European fermentation capacity of over 10,000 metres cubed, one of the largest of any pharmaceutical company in the world, we can stay responsive to customer requirements and fulfil orders. We manufacture a broad portfolio of products including technical grade products, veterinary products, antibiotics, anticoccidials, enzymes, feed additives, hygiene products, vaccines, and active pharmaceutical ingredients. Huvepharma employs over 3,000 colleagues around the world, so there is always someone available to respond to your questions. Visit the Huvepharma website at huvepharma.com for more information and follow us on LinkedIn for regular company updates, scientific thinking, and product news. We hope you enjoy the video.
Hello and welcome to this Feedinfo video on how COVID-19 has impacted supply chains for feed and animal nutrition ingredients. I am Lisa Giro for Feedinfo, and we would like to thank Huvepharma for supporting this video. Today I'm speaking to Stefan Vogel, who is Rabobank's head of Agri Commodities Markets Research. Stefan has a wealth of market research and corporate strategy experience and is responsible for fundamental market analysis and price forecasting of agri commodities. So we should be able to get some excellent insights into what is happening in these markets today. Firstly, what we really want to know is how has the COVID-19 pandemic impacted feed ingredients pricing and trade globally? What have been the most unexpected developments you have seen since the start of the pandemic?
Oh, these are great questions. Let's start maybe with the pricing. So if we're looking at prices actually have largely declined. And if you look at the chart here, I'm showing on top soy meal, in the middle corn, and at the bottom wheat, all Chicago Board of Trade prices. And you can nicely see that prices, especially since Corona has impacted the markets, have fallen quite a bit. We're moving at fairly low levels, especially for corn. But prices, why have prices actually fallen? Well, prices have fallen because one side we have seen asset classes declining from stocks to crude oil, all the way also into our agri commodities. Most impacted were clearly those commodities that are very tightly connected to energy prices, meaning corn, especially because it is driven by ethanol demand in the United States also. We have also seen other commodities spiking quite a bit, especially food grains. The reason for that is governments have interfered and have sometimes restricted the exports. We have seen that in Russia for wheat. We have seen that in Vietnam for rice. But on the feeding side, the good news is corn is plenty available these days. And so low prices should hopefully help the animal protein sector going forward in economically feeding the livestock. Looking at the most surprising thing happening, I would actually say I'm very surprised how very well the supply chains, all the way from farms in the United States, Brazil, or Argentina, to final consumers in feeding areas of Southeast Asia or Europe, are working. In times of a never seen before crisis, we have seen the chains working fine. The commodities are moving so far very well. So I'm maybe surprised about that, and about how quickly people have moved working from home, especially clearly the office workers. But it is unprecedented times in these areas, and I think everybody is doing a fantastic job getting things done from home in a very quick and efficient manner.
Let's now talk about what is happening in US meat processing plants. How do you think the capacity challenges in US meat processing plants are going to impact feed and animal nutrition markets in that region and globally?
Well, clearly we have seen short-term issues of those meat plants being closed. The United States government has put in orders to keep those plants running again. So we are expecting them to hopefully come back online and to produce again in the future. But clearly we have also seen that there has been an impact on the livestock slaughter. What does that mean for the feeding side? Well, those animals that were ready to be slaughtered but could not be slaughtered we're still fed with grains and oilseeds and other feed stuff. So the feed demand has not suffered from that, even so some of the livestock was unfortunately destroyed. Going forward, we still see that the cycle is working, meaning there are new piglets in the barns that need feed to rise further and to grow. So on the feed side, I think the demand is actually fairly well in terms of more increases going forward. Feed demand in the United States actually is projected to be fairly strong. We're showing here the US government's first estimate for the new season demand for corn for feeding, as well as also for soybean meal. And you see that in the last few years, they have grown every year. And so far, there is a continuation of increasing demand in the balance sheets included here. I'd agree to that. Feed demand should continue to rise, but clearly the meat markets in the United States will not only depend on domestic issues, but will also be driven by the import demand of China for meat. And so far, China this year has imported very big quantities of meat out of the United States and other regions of the world. So hopefully good news also for the feed demand to continue to rise, but not to a point where we actually currently are expecting that prices have to exceed the current level significantly.
That's a very interesting point on world feed demand outlook you have given. What about supply chain? How do you think animal nutrition supply chains might change following the pandemic?
Well, as mentioned, we have seen supply chains working very well so far. Nevertheless, we have also unprecedented times. It means we can still expect that maybe here and there's a temporary disruption in supply chains for grains and oilseeds to feed those livestock. Meaning we have also seen already in times of crisis some companies moving from just in time to just in case approaches, meaning building some stocks just in case there is a disruption and they need a kind of a buffer stock to overcome temporary unavailability of grains and oilseeds. Nevertheless, the chains in my mind are very efficient, effective, and they work very well. So given it is a low margin business we're dealing with and big volumes, I'm not convinced we're going to see massive amount of stock building in private hands around the world. I would assume that we rather see in some countries building up some inventories to overcome locally some issues that could be in China, that could be in other key importing countries. What we also have seen is that the changes in the chain drive the paperless trading, meaning we have words like blockchain out there, but it actually takes much more. With people working from home, it's a bit different these days that, well, currently there's usually a lot of paper moving with those commodities to allow the unloading, to allow the payments. I'm convinced that we're going to see an acceleration of the pace of changing towards paperless trade, meaning phytosanitary certificates, meaning other ways of blockchain and other kind of tools and platforms helping to get the trade digitalized and working even more efficient in the future without a lot of the paper that still needs to move current days with the commodities.
What about feed ingredient prices and availability? With certain feed ingredients becoming more expensive or less available, what do you think these market changes mean for feed formulators?
Well, let's first of all put it this way. We have seen that a lot of grains, oilseeds are actually very well available, and that has nothing to do with Corona or COVID. It has to do that the United States is expanding the production area. The forecast for the output in the US is record high. If we're looking into other regions like Brazil, they had a decent crop this year. The outlook for next year is calling for increased production. So there's a lot of feed available in the world. Nevertheless, as mentioned, we can maybe see disruptions in the chain, which temporarily could bring some price movements. What we also need to look for, there are some commodities that are less available. One example could be in the US, the ethanol industry has very much shown a decrease because of people not driving. If you're looking on the right side here of this chart, we have seen the volumes moving down to below 50% of usual production volumes. We're seeing a recovery in that, but when ethanol has declined, that also means that the availability of the byproduct, distillers dried grains, for example, was reduced. We have seen more demand for substitutes, be it corn gluten feed, or be it just a mix of corn and soy. What we also need to look in this balance sheet is clearly the availability is strong out of the US, likely in the next 12 to 18 months. But we're in the beginnings of the season. So clearly we can still see changes in weather reducing or increasing our production estimates. But for now, it looks like prices will stay depressed for many of the feed ingredients in the world. On the global level, we will also see that we're moving into a recession now, which means that the demand for meat, especially in developing world, might not grow as strong as in the past. So it can impact the demand for feeding there, and with low feed prices, that hopefully helps that the livestock sector can continue to produce good volumes for the demand. We have also seen that low prices of corn and soy meal, the key feed ingredients, are not only driven by COVID, but largely are driven from the production side. So we need to keep continuously an eye on the producing regions of the world, on the continuous exports flow of this world. And one big thing that is hovering over the market is still the US-China trade war that was ongoing. Then they signed a phase one trade deal in January. It seems highly unlikely that China can meet that obligation of the trade deal. But what it does is basically, first of all, we see China recovering and in their livestock sector recovering slowly. We had a stronger recovery before Corona hit the region. So it is slowing the recovery somewhat, but we're still expecting a recovery. We're also expecting a slight increase in feed demand. We're expecting more than 90 million tons of soybeans being imported into China. So a 10% at least increase over last season. Not everything might go into the feeding directly. Some might go into government stocks, but the demand in China is strong. That's helping and is changing a bit the flows of goods. And the big question is continuously, will China continue to buy in Brazil, what they currently do, because Brazil has just harvested its soy and is exporting a lot, or will the Chinese start buying more in the US to meet some of the obligations of the phase one trade deal? So there is a lot of question marks over this kind of market, but clearly it will only change from where it will be bought. Meaning if China starts to buy a lot in the United States and not a lot in Brazil anymore, prices in the US will probably rise. Prices in Brazil will probably decline, meaning feed companies here in Europe, in Southeast Asia will probably buy even more in Brazil if it is more expensive, if it is cheaper for them. If the Chinese buy more in Brazil and do not buy a lot in the US, we probably see that US prices get even more under pressure, and it makes more sense for companies outside of China to actually buy US goods rather than Brazilian. So some changes of the trade flow can definitely still happen because of the trade war, and as mentioned also because of weather changes that can still occur. The US crop of corn and soybeans is still under planting these days, but it's finalizing or is in last stages. So a lot can still happen to the production volumes.
And the use of animal nutrition products? How do you think these developments impact the use of animal nutrition products in feed?
I'm an expert in Agri commodities. I'm not an expert in animal nutrition products, meaning all kind of feed additives. But let me answer it a little bit from a different angle. As countries are opening up, we are thinking, well, we're hitting a recession, which means we may see this ongoing demand restrictions here and there, and not a big increase in growth of livestock products in some regions of the world, which could impact the feed demand. Nevertheless, the cheap feed grains should hopefully help the livestock sector to have a low cost base from that side. And with it, feed additives can play, in my mind, a very important role to raise animals efficiently and effectively, both from a cost point, but also in terms of performance of the animal. If we're looking also, cheap grains is not yet a complete given. As mentioned, we're in the beginnings of the season. Things can still change weather-wise, and we need to keep an eye out on that one. So if we're looking, and one big driver in the future will clearly be China from all kind of standpoints, meaning how much meat will China maybe buy in the US and other regions of the world? How quickly will African swine fever, depressed inventories of hogs improve again in China? So we're expecting a recovery, as mentioned, but maybe a slowed one. For feed, we're still expecting the country to maybe show a small increase in 2020 for feed demand. And that's good news for the farmers of the world who are producing grains. it's not yet a threatening news to countries and companies who are feeding livestock, because the demand increase is not, in our view, substantial to drive a rally and price increase into those markets here for the basics of agri commodities from corn to soy. As mentioned, China, both from a recovery of African swine fever as well as from feed demand side, will be a key driver for the prices of agri commodities here going forward, especially maybe to the upside of those markets if the demand would be stronger than the market and we are expecting these days.
I think people are very much interested to know how long can COVID-19's effect on the animal nutrition and feed markets be expected to last. What's your opinion on this?
That's a very, very difficult question to answer. We as Rabobank are using a V-shaped recovery, meaning there was a very quick reduction, and now hopefully there is a kind of constant recovery going forward out of the COVID crisis. Nevertheless, we might be seeing also some setbacks, meaning some countries may have to impose restrictions again. So I think these impacts of COVID will last quite a while with us. But as mentioned, especially for the feed production side of grains, of oilseeds for feeding the animal, the impact has been minimal. The disruptions of the supply chain have been minimal. So from that standpoint, I'm very optimistic that also for the next 1, 2, 3 years, while COVID might be with us and is impacting how we do business, that the supply of grains and oilseeds should be sufficient to allow for relatively cheap feed prices going forward. If we look at the big risks that I'm still seeing, worker availability, it has been an issue, as you've pointed out, for example, in the slaughtering sector in certain regions of the world. It's less of an impact for many of our agri commodities. There are not a lot of people standing and working in ports. Nevertheless, it can happen that we may see temporary disruptions because of worker availability and safety. And on the supply chain side, we can also or have to closely look at situations in key supplying countries of the world. Currently, I'm keeping a very close focus on Brazil, for example. We have unfortunately seen the country evolving into the next epicenter for COVID cases. At the point of recording, we have more than 400,000 cases already, number 2 worldwide with the amount of cases. And that's something we can still fear and face maybe some disruptions in the supply chain. So let's have a look here on the right side in this table, actually how many commodities are moving through certain ports. The good news for the supply of our feed from corn and soy out of Brazil is that there is a relatively wide diversification across multiple ports, meaning, yes, the port of Santos is still the most important port of soy and corn exports, making up 23 to 43% respectively of those commodities. But there are other ports that also play an important role. So a disruption in one port will not completely stop the exports out of the country, but it might still bring some logistical challenges. It's very different in other commodities out of Brazil. Cotton, sugar, even some meat products heavily rely on the exports of the 1 or 2 ports. So clearly good news that there is a bit more diversification in the supply chain in Brazil, but we need to keep an eye on Brazil, Argentina, and also on the US for the supplies of our feed grains and soy meal products going forward. And maybe lastly, one point to mention is government restrictions and interference in trade. As mentioned, we have seen that in Russian wheat. It has started already as we're speaking, and it will last until July 1 when the new season starts, but it's for wheat. We've seen it for rice in some countries. I am relatively optimistic that we will remove trade restrictions on wheat in Russia with the new season, as supplies of wheat should be sufficient to allow exporting again out of the country. But countries will continue to keep an eye on domestic supplies of goods, especially for food, and may have to interfere. And one of the big reasons why some of these countries are so strong in exports right now is the weak currency. Brazilian real is extremely weak. The Russian ruble is weak. And so that's all supporting the export of those countries and may also accelerate the pace of some of the exports compared to what we have seen in previous seasons. But for now, I'm optimistic that also the interference of governments in the supply of feed will remain relatively low going forward here in this crisis.
What a great point to end on. Thank you, Stefan, for your interesting insight, and thank you again to Huvepharma for supporting this video. We hope you all enjoyed this session and tune in for future videos from Feedinfo. Thank you and have a good day.
Thank you very much for having me, and it was a pleasure. I hope it is insightful for all the listeners.